Good afternoon and welcome to the JOURNEO PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to Russ Singleton, CEO. Good afternoon, sir.
Thank you, Lily. Good afternoon, everybody. And thank you very much for making time to hear a story about how JOURNEO is progressing in our first half results. Just by means of introduction, I'm Russ. I'm the Chief Exec, and my colleague over to my right is Nick Lowe. He's our Chief Financial Officer. We've both been with the company some time. I joined right at the end of 2013, and Nick joined us in 2017. And today we're really just going to run through our results. So again, hopefully that most of you are aware of JOURNEO, but we provide information systems and technical services to mainly the UK transportation sector. We're pleased with the H1 results, a very strong performance in line with our expectations. And what JOURNEO does is supplies software, hardware, and services to domestic and international markets. We've got some real momentum behind us. Our revenues are growing, our pipelines are growing, and the group is strongly profitable and cash generative, as you can see. Our revenues increased 17%, up to 25.6 million. We now have 13.2% of our first half recurring revenues mixed between services and software. 67% increase in profit before tax, and our pipeline now stands at over 60 million. These are qualified, pretty advanced opportunities. Obviously, the total pipeline is much larger than that. So really good, strong H1 performance. I'll hand over now to Nick to run through the results in a bit more detail.
Okay, so as Russ said, revenue was very strong. We're up 17% to 25.6 million. In terms of gross profit, we were very pleased with margins. So we were up 6% on gross margin. We moved to 35%. So we were down last year, and we've gained all the margin back this year. So the impact of that was that gross profit was up 41% to 9 million. We flowed the profit down very well. So in terms of underlying PBT, we're up 40%, 3.4 million. And PBT, as Russ touched on, we were 67% up to 2.8 million. It flowed well to EPS as well. So there were minimal new shares went in the period. So EPS was up to 14.76%. Cash was, again, really, really strong. We closed with 12.9 million at the end of June. We are cash generative. We were up 12.9 million. We did have some acquisition costs in the period, but we still grew despite them. So very, very happy with the cash position. Bottom right, we always state our R&D investment. So I think last year we were about 0.75 million. In the half this year, we were 1 million. So our R&D team grew with the acquisition of MultiQ. So we had 1 million pass through the P&L in the half. So the 2.8 million PBT is after the write-off of 1 million of R&D. On the slide before, we touched on recurring revenue. So in the period, 13.2% of our revenue was recurring. That's up from 10% of revenue in the same period last year. And as we look forward, we have an ARR of about 8 million. So looking forward, we see we're at about 16% of revenue. So strong continual growth and moving further towards the number that we want to see. Into segments, fleet systems was strong, 17% up on revenue. It's continually grown over about 4 or 5 years, so it's a very, very, very strong revenue now. Margins were lower in fleet, well, lower compared to the rest of the group. So we had a 25% margin, although that is 1.5% up on the same period last year. Passenger systems, again, continual revenue growth there. So 12% uplift on revenue. Margins were 3% up to 46.5%. So again, very, very happy with that. The bottom graph includes the acquisitions. So we had 2 acquisitions last year, Infotech and MultiQ. Infotech's revenue was 8.5 million, small variance from the same period last year. Where we're very happy is margin there was up at 38%, which is an 11% uplift from last year. So all 3 of those segments had uplifts in gross margin. Additionally, we've got MultiQ, which delivered just over 2 million revenue, and that had a good margin of 40%. It has a strong recurring element as well. So again, very, very pleased with that. And then on the left-hand side, just some of the contracts we announced during the half. So we upped the threshold for announcements to £1 million last year. So we only actually had about, 3 or 4 announcements last year, although our total order intake was about 24 million. So yeah, strong performance there.
Excellent. Thanks, Nick. Then really just to pick out some of the sort of highlights from H1. So as Nick just said, we've actually had record order intake during H1, up from 18 million in the year before up to 24 million. And that run rate has actually continued into H2. So really providing the confidence that's needed for the remainder of this year and into 2025. Very, very strong trading. The R&D investment increased to about 1 million, again, as just mentioned by Nick there. This is a key part of our strategy. We're very closely bonded with our customers, so we're solving real-world needs that they have. We don't tend to have contracts where they place the development with us. We prefer to retain the intellectual property, but the R&D is what we call customer applied or customer led, and this is why it's driving our growth effectively. In January, we formed the JOURNEO Design Centre, which is a new sort of structure within JOURNEO Group, and that is to apply Infotech's design for manufacturing and design for service methodology across all of JOURNEO Group's products. So we're bringing our products that have historically been manufactured in our Coventry plant through a design for manufacturing process. And in due course, they will be, the microelectronics parts of them will be produced at Infotech. And this will give us a cost reduction in our cost of sales. It'll give us the benefits of scale economies, high volumes of components. But crucially, it'll give us the standardization of service. So our engineers, we have a nationwide network of around 40 engineers with vans and spares. They will require fewer spares in the inventory, and it will increase the familiarization of the products. And then lastly, it will also give these products the international approvals and accreditations for them to be sold on a worldwide basis. So it's a very big and important step for JOURNEO that we do this. The first products coming out of the JDC will be launched into the market in Q1 2025. And sort of simultaneous with that, we'll start to build international channel distribution for resellers and value-added and VARs effectively. The other sort of key points in here is that we're also strengthening the senior leadership team. We already have an experienced senior leadership team around Nick and I, and through the acquisitions, additional high caliber people have come in. But we're further strengthening this with other appointments, which we expect to be making towards the end of this year and into 2025. And that's to give us the bench strength effectively to double the business from sort of 50 million to 100 million in the next 2 to 3 years. Then the final point really is that we are extending the JOURNEO portal, which is going to be effectively brought to the market under a new brand, which we're calling Apex in November. And that will be bringing in all of the cloud-based applications, initially from JOURNEO Fleet Systems and JOURNEO Passenger Systems, but in due course it will bring in across the systems such as that are embedded within Javelin and also within JOURNEO Group's EPI, which is an executable program, not cloud-based currently. So we've seen really over the next 12 months, the number of connections to our our cloud-based application will more than double. And also that will then give us the opportunity to license the microservices which are within them, which we currently don't do. So we're expecting our SaaS revenue to increase and the margins as a result of that to increase. And that will see the recurring revenue drive up from the 16%, I think is the number that Nick indicated, looking forward. We can see how we can punch through to 20% and beyond with this strategy. And then the other thing really just to bear in mind is there are millions of journeys now every day managed either by Journeo or Infotech or MultiQ software. And obviously we're heading through to sort of 50 million revenue, and there are now 200 people in Journeo Group. Oh, okay. The next slide really is just a snapshot of the people that we work with. And we're obviously delighted to be providing services to some of these people, the local authorities, transport operators, media companies, rail companies, a variety of businesses here. Some of them have been buying our services or by buying our products, but over the last few years, we've actually been embedding ourselves within their operations. So some of the fleet enterprise and the airport enterprises now are running on the back of Journeo software and systems. This next slide really is what excites us about it. It's why Nick and I and the board have actually invested our own money into this business with shareholders. And it's what we've seen really coming for a number of years, that the public transport infrastructure and the systems on board the vehicles are fragmented. They don't interoperate and don't interconnect. And due to things like urbanization, that's driving up congestion. And it's just an inexorable move to have to connect these systems together to enable people to continue to move around increasingly congested cities. We see an opportunity for Journeo to be the convergence partner, both at the systems level and at the product level. And we've been acquiring market share in the local infrastructure and also on the fleet market to enable us to do that. You then have the sort of climate change and the move to decarbonize public transport and also freight transport, which again is going to require interconnected systems. I won't go through all of these, but there's some amazing technological breakthroughs on the horizon, particularly coming out of artificial intelligence and also solid-state battery technology, which are going to drive fundamental change into the way that we all move around our urban landscapes. And Journeo is well positioned to be the sort of partner of choice to provide these systems. There's also very significant government stimuli to enable this in the UK and in other countries now, but the UK is leading the charge here. And there's three sort of main financial pillars that I'd like you to draw your attention to. So number one is the BSIP, Bus Service Improvement Plan. This is initially 1.2 billion, and that's aimed at local authorities and fleet operators who form and enhance partnerships to gain access to this funding. And that started, we have received contracts already under the BSIP programme. And we're starting to see now fleet operators increase their renewals back to sort of the 5 to 7% per annum for electric vehicles and in due course hydrogen fuel cell vehicles. It's a great catalyst, and obviously it poses a number of challenges to the domestic vehicle market manufacturer, because the Chinese electric vehicles are lower cost and they have higher range. But it's a really good sign for Journeo, and we expect this now to continue. And on the city regional sustainable transport settlements, it's not easy to say, the CRSTS, that's 5.7 billion that's been allocated to local authorities over 5 years, about just over a billion a year. And that's to improve the whole amenity around public transport, so creating parking ride applications, pedestrianising parts of the inner cities, and increasing safety systems around cycle lanes and reducing pollution. Again, plays very, very strongly into Journeo's sort of core capabilities there. And the third one, there are others, but the third one actually is the Rail Control Period 7. sort of 45 billion or so has been allocated to that over the next 5 years. It started in April this year. And whilst we've seen some uncertainty about timing and Great British Railways, the Labour's plans appear to support increased ridership on the train network, and the digital signal programming is already underway, where the signals are going to move from being out on the track to inside the driver cab, and all of the systems about optimization and safety are proceeding. So Journeo is looking forward to these sort of three main funding pots as being a significant market driver of our growth over the next 3 to 5 years. And it's that really gives us that confidence. The next slide really is about our strategy. Our strategy hasn't changed from day one. It's to form a technical capability and the services capability such that we can create a scalable product and software and services platform as we build our market share in the local authority spaces and with the fleet operators. And across the last 4 years, Journeo effectively came to market in 2020 when we launched our cloud applications and the brand changed. And we've had some landmark deliveries in each of the last 4 years. I won't go through all of them, but in 2021, we launched Stansted Airport and we secured our first wins in Wales. In 2022, we secured fleet-wide rollouts of our cloud-based application, and we secured our largest software-only order. And at the end of 2022, we commenced our M&A work. In 2023, in January 2023, we raised £8.5 million with Cavendish's help in a 4 times oversubscribed placing, and we acquired Infotech. We had further adoption of our software in Wales. And in September, we acquired MultiQ for €2.5 million from Swedish parent company. And in 2024, we've continued that growth, very strong organic growth. We've begun the Journeo Design Centre, and very recently, we've started something called Project Odyssey, which is to unify our production and manufacturing with the Infotech methodologies, which will give us the EMC, UL, and FCC approvals. So the products that will come out of that, which we're going to be launching in Q1 25, will be world-class products that can be sold on the world stage. We've also continued our M&A work, and we are anticipating completing 1 or 2 acquisitions early in the new year. These will be bolt-on acquisitions, not at the sort of transformational level, although we do have some discussions about transformational level acquisitions, which we may be completing during 2025. We will need to come back out to the market for those. These are beyond the cash and debt facility that Journeo Group currently has, but a very strong and well-focused strategy there that's delivering for us. So to sort of bring this together before we sort of move on to the Q&A, our strategy is to continue the development of Journeo through technology-enabled growth, both organically and acquisitively, and to take Journeo up through the 100 million revenue into the 100 million market cap by delivering on our ambitious targets for increasing recurring revenue, increasing the software component within that recurring revenue. And the reason that we believe that this is achievable is back down to these sort of global stage effects of the megatrends, effectively rapid urbanization, driving congestion. That's going to require autonomous levels of intercommunication between infrastructure and the vehicles, and 5G, very low latency networks. Journeo has been positioning itself in that place. The climate change is going to move from diesel-based propulsion into electric and hydrogen fuel cell. That means that the vehicles effectively are online continuously. It's going to change the market for telematics, but it means that things like the artificial intelligence, machine learning, and the sort of interoperability of the systems is going to be required, and Journeo has been building our market share for doing that. We see lots of opportunity now for consolidation and acquisition, and that is in turn going to increase our operating margins if it's a consolidation, as we take out duplicated cost, or if it's acquisition, as we share our technology with these businesses. We're also now being attracted to opportunities in adjacent markets, and that could be adjacent territories, for example, into North America or further into continental Europe, or it could be businesses that are working in other sectors of the market that Journeo currently doesn't have the domain expertise, but our scalable technology can magnify the capability of these businesses. So I would describe those both as bolt-on and territorial expansion. So that it completes the presentation in terms of our results. I'd now like to hand back to Lily before we move into the Q&A section.
Russ, Nick, thank you very much for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab situated on the top right-hand corner of your screen. Just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the public Q&A, can be accessed via your Investor dashboard. As you can see, we've received a number of questions throughout today's presentation. Can I please ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end.
Okay, do you want to take the top one? We're going to talk about the dividend one. So the bit small on the screen. So, okay. So this is from David C. Question for us. Where do dividends feature in boards thinking about future? That's a really good question. The group's had retained losses for some time, but due to our profitability, we're going to punch through that, and they will be wiped out during H2, actually. So in theory, a dividend would be possible. At the moment, there isn't any agreement to do that. It's obviously something that is being discussed around the board table, but the sort of view so far has been that we have a number of acquisition opportunities, and that it will probably be a better use for the funds to be used in that regard. But that situation may change due to the very strong cash generative nature of the business. So there's no decision being taken, and we are increasingly being asked the same question. So it's a good question, and I'm not ducking the question. At the moment, a decision hasn't been taken. So I hope that's okay. Okay, do you want to take
that next one? Yeah. So question, in the cash flow statement, there is, what's the meaning of cash inflow and acquisition in 2023 of 3.03 million? So in 2023, we did 2 acquisitions. The first one, Infotech, came with a large cash balance. So we actually had more cash come in than we paid out. So I believe that the net movement on that was just over 4 million, which we showed in H1 2023. The full year movement of 3 million is the acquisition we did in the second half of the year. MultiQ was obviously a net cash out, so that in effect was the movement. But fundamentally, we gained cash on acquisitions last year.
Thanks, Nick. Stephen P, you mentioned in the last webinar that we're progressing with the European regulatory permissions. Can we give an update? Yes, we can. So there's a number of dimensions to this. So if we look at it from the IT for PT point of view, there's been a harmonisation between German regulation and the ITXPT, so they're now harmonised. And we have an ITXPT development programme, effectively being led by our team in Denmark, who obviously Denmark is more advanced. Well, in fact, the whole Nordic area is more advanced in connected vehicle technology. So that's going ahead. And we will expect to be having a fully ITXPT compliant solution sometime during H1 next year, which means that we can actually sell it worldwide. The other areas of regulation are actually to do with the design for manufacturing process that we're going through at Infotech. So Infotech's products actually are all EN 5515 and have UL approvals for sale in the US, continental Europe, and worldwide, in fact. But Journeo products didn't. They were only had the approvals for sale in the UK. And so as part of Project Odyssey, we're going through this design for manufacturing and design for service approach, and the products will actually be fully approved. So they'll have ULC, FCC, and all of the TUV approvals for worldwide sales. That's going to start in Q1. So great deal of work going on in that regard. So I hope that answers the questions.
Shall I say the next one?
Yeah, okay.
This question is, there's been a debate between a few investors about our net cash balance and whether this is really just upfront payments against deferred revenue, or whether anything nets off against it. So we do have a large deferred revenue balance of 9.7 million. Predominantly comes from our passenger business, where we usually take upfront payments on the contracts. That there is a fair amount of offset against it. So within the 9.7 million, we have just under 2 million of the balance relates to construction contract accounting, which is a pure offset between debtors and creditors. So you can remove 2 million of it. There is obviously stock purchased against the contracts, which will easily be another 1 to 1.5 million. And some of the balances will have been invoiced right at the end of the period, so will actually sit in the sales ledger. So you can halve the deferred revenue balance to actually get the true impact of how much cash we've actually got ahead of that.
Great, thanks, Nick. Rob B, question here. With the change in the UK government, who appear to be positive on public transport, have we seen any significant change in the contracting environment or approach? We haven't seen this actually since the government change. We actually saw it in the run-up to the change, where some of the sort of inquiries, this has sort of mainly affected Infotech, I should say, and that's the rail. Not sure how much you know about this, but the rail network rail. The rail industry works in control periods. They're 5-year control periods, and CP6 ended in March this year, and CP7 started in April. And the Williams Shapps report came out on rail, pointing to sort of funding that was likely to be happening in CP. So very, very complex picture here. But it looked like there's something like about 45 billion going to be allocated to CP7, but it needed to be matched with savings and efficiencies. And what we've found in the JOURNEO fleet system side of our business is that it's had sort of the opposite effect. It's actually stimulated opportunities, and we've recently announced 3 million of wins with Porterbrook and Arriva Train Care. But at Infotech, it's actually sort of put a delay in terms of projects which he was expecting to be working on through with Network Rail. And so it's like there's like a twofold effect of this. There's some question marks about how the TOCs are going to operate in the new GBR model, and also how the HS2 is actually going to spin out. So at the moment, we've seen a sort of overall, it's a neutral picture. It's better than we were anticipating on the onboard vehicle side, and slightly slower than Infotech were expecting on the infrastructure side. But I must add, the actual pipeline of opportunity that we have is bigger than ever, and Infotech actually is enormous. So at the moment, it's given us, despite the uncertainty, and obviously we haven't got a crystal ball, we don't actually know what the government are going to say. We're feeling pretty confident, actually, well, very confident about 2024 and 2025 in terms of delivery, if that's okay. So do you want to take the next one?
Yeah, shall I go? Try to scroll. Take that one.
Just scroll up. Yeah.
Yeah.
Okay.
Could you please provide a little more detail around the recent margin expansion? So yes, we were down about the same amount last year. We were down about 6% last year. We had 3 or 4 factors impacted last year's margins. We had some one-off contracts where we did have a lower upfront margin, but we've gained on that in the future from recurring revenue. We had the supply chain issues last year, which have very much washed themselves out. And we had one particular, I think we had one particular product line where we received an increase from the supplier, and we couldn't immediately pass it on to the customer. So we've said previously, all of those, most of those righted themselves towards the end of last year. So we've seen all that come back this year. And then coupled with that, we've also seen that the recurring revenue proportion has gone up, and that's where we see a gain in the margin. We see that keep on moving forward. So we won't get another 6% gain next year, but we expect to see margins still continuing to increase.
Thanks, Nick. Question from Ian W. When we say 100 million turnover in the medium term, what time length, number of years do you foresee? So what we're aiming to do here is we think we can do this in a 2 to 3 year time frame. And the way that we think we can achieve that is about 50% of that coming through organic growth. So taking our revenue, let's say currently around the sort of 50 million mark to 75, and then the balance through acquisition. And this is we think is quite an achievable objective. A number of the acquisition opportunities that we have would actually take us well past that 100 million. So at the moment, we think it's a fairly cautious view, and we're aiming to, as we do this, to improve both the quality and visibility of our earnings. So increasing the recurring revenue and increasing the software component within that recurring revenue. So I hope that's okay for you, Darian. There's a lot of duplication actually in these questions. Yeah.
Done that.
Forecast. There's the same sort of questions here, aren't we?
Right. Done that.
So just bear with us a few. We can't see all of the questions. Would buybacks not be preferable to dividends given the shares valuation? It's probably a similar discussion point. Is this Daniel? So let's say we have a good cash position and we're strongly cash generative. At the moment, we believe we've got first mover advantage with some of the technology that we've developed. And therefore, what we would like to do is to capitalize on that through acquiring businesses that are a route to market for it. So again, rather than using the cash for dividends or buybacks, at the moment we prefer to deploy it on sort of business development type opportunities.
Shall I do that one?
Yeah, take that one. Yeah.
That's a general question. Does the potential raising of CGT in the budget provide acquisition opportunities? At the moment, I guess it's more likely delaying any opportunity. So we've got 5 or 6 weeks away from the budget, which isn't time to complete an acquisition. So it's more likely that certainly we couldn't complete one by that time. It's whether it encourages people after that. So it might provide opportunities. At the moment, I would say it's more likely halting some potential ones happening.
Okay, good question from Melville, D. Melville here. Including potential acquisitions, you do seem to have a lot of balls in the air, or at least in prospect. Are you confident of managing and coordinating them all whilst maintaining day-to-day operations? A really good question, and obviously it's something that Nick and I spend quite a bit of our time thinking about. Obviously, we've got a really active business here that's doing really well, and we've got these external market drivers that we think are going to drive our growth for the next few years. So we want to stay very, very focused, and it's for that reason actually that we've been strengthening the senior leadership team. So we've made a couple of recruits and readjustments of personnel this year, with further appointments imminent. So recruiting a head of software and other appointments coming down the line with, for example, a head of customer experience probably in next year. Our strategy, just in terms of the acquisitions, is we look to secure the management. So we're not looking to operationally manage the businesses. What we're looking for is a good team. And so the way that they will work will be that they will have access to Journeo technologies. So we will see through their businesses as a way of taking what Journeo already has to these new markets. And where it's overseas, obviously the team have to be very capable. So we believe that we're strengthening the senior leadership team because there's a cost attached to that. We're doing that at the right time. And as I say, we're looking to double the business over the next sort of 2 to 3 year period, which we believe we can do with that team. Okay,
I think we've covered.
so
Can't do that.
what's that one there? Do you envision the company's future for a lot of duplication?
A few more popping up as well.
Do you want to pick?
So there's a question about Infotech sales, which says they were Infotech sales were down 8%. So I guess, yeah, we were down from 9.3 million to 8.5. It's a small. That's I say it's a small decrease in terms of it's just a pure timing function. So there's nothing. I guess if we look at full year, we don't see that that's anything's dropped in the core business there. So no,
Okay.
nothing.
William D, can you give us more detailed update on the existing contracts and sales pipeline in the US? I can. That's quite easy, actually. So the Infotech's contract in the US is to supply a media company, and the media company have exclusive rights for 10 years through to 2030 for the New York subway. The footfall on the subway is only it's less than 60% of what it was pre-pandemic, and as a result of that, the media company can't generate the advertising revenue. So the decision's been taken not to install digital media screens on the next stages of the subway upgrade. But we are still in discussion with our media customer about upgrades and replacements due to the quite high vandalization that they have in the New York Metro. So whilst there isn't the sort of headline grabbing large project going through in 2025, we are expecting additional revenue to come from that. And we also have some prospects which at the moment they're not actually on the pipeline because we don't know enough about them. But we've been through our mergers and acquisitions work, we've identified 2 potential companies for acquisition in the US, and we have actually done some joint bids with one of them, which is independent actually of Infotech, that might lead to sales in 2025. So our aim is still ideally to find the right acquisition in the US that looks like a mini Journeo, that we can introduce Journeo technology into the US market, because the UK market obviously is quite large, but the US market is $5 trillion. It's absolutely huge amount of money the Biden administration has set aside for infrastructure upgrade. So great potential there, and we think that Journeo technology has something to offer. But just in terms of pipeline, it currently in the US, it's very small, and wouldn't want to give you the impression that we are expecting or even require any revenue from the US to meet our FY25 objectives. It would be icing on the cake if we secure any of that.
I think we've covered.
Okay.
I think we've covered.
We're just looking at a lot of duplication.
I think that's all.
I think we've covered them all. So
Russ, Nick,
Yep.
Yeah.
thank you for answering all those questions you can from investors. And of course, the company can review all questions submitted today, and we'll publish those responses on the Investor Meet Company platform. Just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Russ, could I please just ask you for a few closing comments?
First, I'd like to thank you for making time to hear our story. We are still not the finished article. Where we're trying to get Journeo is into critical mass, and where people are adopting our products, our services, and our software in a significant way in the different highly populated areas around the world. We've got a strong and growing presence in the UK, and through the MultiQ acquisition, we now can punch through with greater strength into the Nordic markets. And in due course, we expect to then move into the rest of continental Europe through the European approvals process, which we're going through, and then in due course to build out our capabilities in North America. So we thank you for your interest in us. We welcome any questions that you might have. And for the existing shareholders amongst you, we're really grateful to your support. It means a lot to us. And we take this very, very seriously. We think there's a great opportunity for us. So thank you.
Russ, Nick, thank you for updating investors today. Can I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of JOURNEO PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.